Yep, Justdial is the other interesting one though in terms of earnings. Remember, the paid listing business growth of 4.7 quarter on quarter, it did fall short of street estimates. So they could have probably done a bit more, but maybe the realizations out there have gone up a bit. So that is the one key thing that we'll try and find out. And we'll also try and find out from Ramkumar Krishnamachari if the 5% quarter on quarter growth rate is possible or no. So that is that big conversation that is coming up in just moments from now from Justdial. So to watch out for that as well. Of course, I also think realizations and what they do with some of the new businesses is something that we'll be watching out for. Fundraising is now a thing of the past, really. Ramkumar Krishnamachari, CFO, joins us right now on the show. Good having you, Ram. Thanks for joining in. That same question to you. Growth in paid listings, 4.7, slightly short of street estimates. Was the focus more on improving realizations in quarter one?
No, see, what happens is from this happens from quarter, various quarters. Our focus is on making sure that we, spread our footprint across. And March actually traditionally is a very strong quarter for us. And if you look at year on year, you will see that March is the strongest quarter. And Q1, it's sort of the growth sort of, it's flattish from, overall paid listings and overall listings perspective. So nothing, I would say, different that has happened. We continue to expand. We continue to invest. We've added some 1,000 people during the quarter. So you will see the paid listings going up as we move subsequently into the quarters. So we are not, we are not concerned on that.
Mr. Krishnamachari, morning. So what kind of quarterly growth run rate can you have or aspire for paid listings? I mean, is a 5% plus QOQ number achievable?
No, our belief is that we said that about 20 to 25% growth rate overall for the year we think can be achieved on the paid listings, and we are on track for that. We have no reason for us to change that belief.
What about realizations? Do you expect them to be volatile going ahead?
Realization, I've always maintained that it may go up or down, couple of, 100 to 200 dips, depending on our focus. In some quarter we may focus on realization, some quarter we focus on volume. It's some of these strategies we do it from quarter to quarter. Overall, our belief is that the realization will be in a range between 200 to 300 basis points up or down, depending on the relative impact of each of these variables at any given quarter. So, and I don't have any reasons to change that belief.
Right. So how is general business sentiment looking? I mean, particularly among SMEs, which form the biggest base for paid listings.
It's looking very strong. Honestly, I think the ecosystem is supporting us. They are realizing that consumers are going online and they got to have a presence online. And it is making our job easier for us to convince them to be part of a platform. And Justdial being the most popular destination as far as local search is concerned, they are also realizing that they have to be part of this platform to get discovered, and now they could get transacted. So I think overall I would say the sentiment is quite strong. It's just that we just have to focus on our own execution and make sure that we sign up as many vendors as possible, and which is what we are focused on.
Can you give us color on how do you see revenue contribution mix from metros versus the tier 2 and 3 cities over the next couple of years? I mean, as you expand your reach yourself.
Definitely our focus and expansion is on the next 25 cities across India. We are, putting manpower there, sales infrastructure there. So you would see the contribution going up from the non-metro cities or the non-top 11 cities, going up from the current 11%. Possibly we can go up to 20% in the next couple of years.
Right. Adjusted EBITDA as well, that's come in at 33%, substantial improvement on a year-on-year basis. Can these levels be sustained, and can you give us color on what levels or other levers that you can play with to improve your margins?
Look, I would say that we continue to be in the investment phase as far as both Search Plus and core business is concerned, and despite that, we are able to maintain stable margin. Our belief and conviction is there is an inherent operating leverage in the business, and but then we are also investing, employing back that incremental margin back into the business. Our belief is that despite making investment, we will maintain, and excluding the one-time spend and the ESOP, we will be maintaining a stable margin. And definitely, as you know, once we, couple of years down the line, once we achieve a steady state business, we should be able to sort of look at 35% plus sustainable EBITDA margin.
What will be the impact on the P&L because of this launch?
Yeah, as I said, a lot of it will be one time. So, as I mentioned, we have, estimate is about 100 crore plus. But, you know, how much we would spend in Q2, how much we would spend in the subsequent first half of next year, it all depends. Yeah, so you can assume maybe 50% of, or maybe a good portion of that will be spent in the for the launch, actually.
Right. So since the launch spend will significantly pull down operating profits, what's the material recovery you expect towards the second half?
No, if you account for the one-time ad spend, definitely the margins will be lower. As I mentioned, these ad, you have to look at it as a launch expense. So you have to look at it as a one-time. Our belief is that we should be able to operate this business with about 4 to 5% of our revenue going into the advertising spend, and that will give us a good growth in margin year on year once the Search Plus scale up. So if you account for the one-time ad spend, definitely the margins will be down.
You've shown earlier confidence in a 30% top line growth for the year, but will a profit growth trail that mark, Ram?
See, profit, definitely our belief is that profit will reflect the sales growth, and you will see us finishing strongly just like previous year. So while we don't give guidance on the top line, etc., our belief is that we will end the year strongly as we did in 2015.
Okay, Ram, we wish you all the best for that. Thanks for taking the time out and joining us. That's Justdial. Remember, it's again a stock that's corrected very, very badly from some 1890 odd, if I'm not wrong, that's the fresh high for Justdial, or that's the 52-week high or a life high for Justdial. Yes, 1894. It's resting at 1102. So it's a stock that's gone down and stayed down. A lot of people believe that they have conviction in this, but as you can see, it's actually closer to its 52-week lows, this as opposed to being close to its 52-week highs. So it's lost a bit of fancy, really, Justdial. And with reason, there is a bit of an issue that came up with regards to its fundraising and a few other things. And now the numbers are ho-hum. I think they'll need to do something special the next 2 or 3 quarters to get back into the reckoning. For now, a bit soft. Okay, but it's, I think, very close to wrapping up the show as well. Just about 4-5 minutes left. Let's get in some more trading ideas from Mitesh Thakkar, because I think we are trading fairly well. 8391, 1/3% in the green.